Good morning friends, myself from Dinesh from Fundamental Research. I will discuss the Q1FY13 banking preview. We expect banks in our coverage to post earnings growth of 21.5% YOY in Q1 compared to about 30% YOY growth seen in the Q4 FY12. The private sector banks are expected to post better results as the earnings of private sector banks will grow by about 28% YOY compared to about 17% growth expected from the PSU banks. The net interest income growth of banks in our coverage is expected to grow by about 19% YOY, which is also lower on sequential basis as the NII has grown by about 22% in the preceding quarter. However, on quarter-on-quarter basis, the NII growth is expected to remain flattish due to a slower business growth and decline in margins. During the quarter, the banks have reduced their lending rates, and there has been a firming of cost of funds due to tight liquidity, which will lead to a decline in margins by about 5 to 10 basis points and thereby impact NII growth to an extent. The asset quality pressure is likely to continue in this quarter also due to increased slippages mainly coming from the mid corporate and SME segment. This quarter the restructuring will also increase due to restructuring of the big ticket loans, especially from state electricity boards and Air India in case of Bank of India. So these will increase in slippages and restructuring will keep provisioning at elevated levels. However, the treasury gains during the quarter will partly offset for that. During the quarter, the yields have dropped by about 20 to 30 basis points, which will lead to treasury gains for most banks. Therefore, in terms of better performance expected from private sector banks compared to PSU banks, we continue to prefer private sector banks as earning growth will be better and also there will be lesser strain on asset quality. ICICI Bank and Yes Bank is a topic within private sector banks. Among the PSU banks, we prefer Allahabad Bank due to attractive valuations. Thank you.